Hi guys, it's Sam Norris here, the Property Investors Broker, and today I'm going to be talking you through something that's really important to every single buy-to-let investor, and that is how much you can borrow. And as you can see on the board, we're going to be talking about how lenders use a rental calculator to work out what your loan amount will be. Stick around. Hi guys, welcome back. So a lot of clients ask me when I start talking to them about buy-to-let mortgages, Sam, I'm going to buy this property or I'm going to refinance a particular property. How much can I actually borrow? Well, I thought I would jump on the old camera today to run through how lenders work this out. Now, it's very, very important to understand that what I'm going to go through with you right now is what we call a standard rental calculator. There are variations and different lenders have different ways of working things out, but this is just the standard. This is to get you going. These are the simple facts. Okay, so what is a rental stress test? Let's get started with that. This is a formula that mortgage lenders, buy-to-let mortgage lenders, will use to work out whether the rent that your property is going to achieve is actually going to be enough to allow you to borrow the amount of money you want. As simple as that. So what I'm going to do now is go through a quick example to show you how this formula works in principle. So for this, I've got my handy little calculator with me so that we can run through this nice and quickly. But for this example, what I'm going to do, just to keep things nice and simple, we're going to work this out based on a property that is valued at 100,000. So property value is £100,000, which means, if your maths is decent, don't need the calculator for this, that if you're borrowing a 75% loan to value mortgage, your mortgage amount is going to be 75,000. Now, how will lenders work out what rental income you need to actually achieve in order to get this 75,000? Well, what we first need to do is use the lender's standard rental calculator, which is that lenders are going to stress test your monthly mortgage payment at 5.5%. So what we need to do first is work out what the monthly interest payment is going to be at a stress tested rate of 5.5%. So let's do that quickly now on the calculator. We've got 75,000 times 5.5% divided by 12. That gives us a figure of £343.75. So 5.5%, the monthly payment is £343.75. Okay. Now, lenders are then going to want your rental income to be 125% of this figure, 125% of that figure. Okay. So by doing that, we times this figure of £343.75 by 125%. And that means that your rental needs to be £429.69. Okay? So that's how lenders work this out on a standard rental calculator basis. But some lenders will be a bit more flexible, and actually most of the time, if you're taking out a 5-year fixed rate, they will actually be a hell of a lot more flexible. So let's talk through now how that will change, or how this rental calculator will change based on a 5-year fixed rate. So for this example, we're still going to use our £100,000 purchase price along with our value along with our 75% or £75,000 mortgage. Okay, so just before we were talking about the standard rental calculator, which most lenders use for their 2-year fixed rate products. Now what we're going to do is see how that might change if we go for a 5-year fixed rate, where lenders will be a bit more flexible. Now the key difference here is about the interest rate that's used to stress test this formula. Okay, so we used a rental stress test of 5.5% with a 2-year fixed rate, but when it comes to 5-year, most lenders will actually do it at the pay rate, i.e. the amount that you're actually paying. So let's think about the market at the moment. This is being recorded in January 2022. 5-year fixed rates on buy-to-let mortgages for limited companies are sitting around the 3% mark. So let's use 3% as our example for this. So going back to what we were doing before, we have to work out what the monthly payments on a £75,000 mortgage are going to be at an interest rate of 3.5%. So 75,000 times 3% divided by 12. So that means the monthly mortgage payment will be £187.50. But don't forget, exactly the same as the other stress test, the rental income needs to be 125% of that figure. So what does that give us? We times that by 125%, and that gives us a figure of 234.38 if we round up to the nearest. So as you can see from these two examples, whether you go for a 2-year fixed rate or a 5-year fixed rate can actually make a really, really big difference in terms of the minimum rental income that you need. Now, if you are probably investing in property that's above the Watford Gap geographically, chances are the yield that you're going to get is going to mean that you're going to be able to probably opt for a 2 or a 5-year. However, many of my clients actually invest in London where yields are historically low, and sometimes you are actually restricted to 5-year fixed rates because the standard rental calculator doesn't work at that level. So something to think about, guys. I wanted to put this video together because I get asked this question a lot. So I really, really hope that this has kind of demystified a few of the myths surrounding how buy-to-let mortgages are worked out. If you do have any follow-up questions to this, please, please, please put them in the comments underneath this particular video and I'll come to them as soon as I possibly can. And if you do want to reach out and have a chat about this, don't forget to go and follow me on Instagram and send me a direct message at @SamNorris is my handle over on Instagram. Hope this has been helpful. Catch you on the next video. Cheers, guys.